Okay, everyone, you should be able to hear me. If you can, please let me know. So I know that I'm coming through. Awesome. Thank you, Dan. All right, so you can ask questions here, type in as well. Hey, Andre. So markets are down here. Well, as you can see on the screen, a little less than 500 now, 456. You can see in the left part of my screen there. So I thought we'd take a look at that. And as you can see here, I've got what I show in some of the videos and in the letters on Monday, the four major markets on the top of the screen there. So we'll go through that, and the way I would every day, the way I do when I'm looking at this in the moment live, making an assessment of where things are going and where they might go. So as you can see here, as prices moved up here this morning, I don't know why that's showing that like that. Just give me a sec here. You got a bit of a whipsaw type of market going on in here. And that was the theme of the video this morning. We had the move down here. And let's throw the futures down here so we can see the difference between them. Because we did get the retest on the futures, and it's exactly what I was hoping to see at the time when the spiders came down here. So it's kind of interesting that did not happen. Because they typically move in unison. As you can see, they're moving down here, spiders in the upper left, futures are right here, and they look pretty much the same. Of course, the futures have the 24-hour element to them, so they are a bit different. So we had the move up and the consolidation, and I was short these spiders over here because of the topping tail looking for a move down, and it did not happen. And I, of course, had to cover and reverse back up again. And this was, the Friday. And so then we're looking for the move back to the upside because of that bullish close. And it happens. So at that point, of course, I'm thinking, hey, this is going to be a measured move higher. And that's, you get this type of a move. You get a consolidation, which, suggests with the topping tail that it's going to pull back. And then as it clears it, historically, you get the measured move back up to the next resistance area. And now we get the whipsaw, and it comes right back in again. And rather than, say, holding at the minor support and the 50 MA, which is the green line, it breaks down through this prior low. So here, now what? Where are we going? So with that being said, we look for what support there is to the left, and we can see this congestion here. But at this point, I'm going to flip over to my 60-minute chart. We could do that on the futures, but I do it here as well. But before I do that, let's just look at these other markets. So the Qs, which was showing relative strength, and this obviously was a concern that they came up to resistance, and the spiders was showing relative weakness. But I was thinking, okay, what should happen here based on the ability to go sideways, as they did, and then to move up? Well, and I wrote this in Monday's letter, the underperformer, or the one showing relative weakness, should begin to outperform. And I'm saying, when I say the one, this is a general concept. So this could be applied to if we were looking at, say, semiconductor stocks. And so let's say, for example, Intel, it reaches resistance. It showed relative strength. And another semiconductor, which was weaker and underperformed, it now begins to pick up and show strength while Intel consolidates, or maybe just starts to move slower. So that's what I thought would happen with the Qs. They begin to move slower. The spiders begin to push higher. And now it didn't, and it comes back in, and we get the whipsaw. So, now, of course, it's like, okay, do we short? What do we do here? Well, Q's at a little bit of support here. The Russell looks like it has to go down to the 200. And the transports, which were showing relative weakness here, they did break out. They're showing a little bit of relative strength because they're holding the low. Right? So they're on some support. So let's see what they look like on the 60-minute. And we'll scrunch this up a little bit. So here was the break of the support. And notice the bottoming tail bar right there. Right? So buyers stepped up on the support like they typically do. And now here's an example of a measured move to the downside. And is there any support there? Well, so what I do is I do this, see, is there anything in this area? And there is a little shelf right there. So will the spiders stop there at 265-ish? We have to wait and see. And maybe they're going to get there as we're going through this. Now, the Qs, they've broken through that support, and there's really nothing there. You got a little bit of a tail of range expansion there on the prior 60-minute bar. But, you know, there's nothing here to the left. And let's see if I can grab that. Okay. And so we could say, will that go down there? One of the concepts that I always look for is looking at, you know, the broader markets together is, does one reach an area of resistance like the Qs did, or another one reaching an area of support, and then seeing what the reaction is with the others. So Russell, the Russell, there's a little shelf of support there on the 60-minute. The transports are right there. And let's see where the S&Ps are. So they've cracked through that prior level that I had marked off there. And let's just, you know, there's really nothing there. Well, down at this, there's a little shelf right there. So that correlates, right? 265 and 262, you know, 2625 right there. So we do have that correlation of, you know, that reversal there. And sometimes you don't, because of this being a 24-hour chart and the spiders being what we call a day chart. Now I can convert that to make it a 24-hour chart, but you know, this is the normal way that we look at the spiders, being 9:30 to 4 o'clock. So as this is moving down, and so the thought is here, it's going to keep going down, even though it's beginning to stabilize here in the moment. You know, that support, I went too far. That support, the support is still far off. So now that provides me with a bias of, well, this is, that green line is now a resistance, and then that minor resistance area is a bit subjective. But okay, my thinking is it's going to go down here. The Russell hasn't reached support. The Qs haven't reached support. This could get a lot uglier than where it is. So let's flip this over to a 5-minute. We'll go down to a smaller time frame. Here's the resistance here. So at this point, unless I'm willing to give this a lot of room to consider shorting these, I can't do anything at the moment. Let me just throw volume there. I just want to see if it does have a spike in volume. I already had it on there. Okay. It was just hidden. Little okay. So what I wanted to see there, was there a volume spike on this reversal that happened here? You know, the spike was here, and now there was the retest and a little bit of a reversal here. But it's, my bias is that it still continues to go lower. You know, this range is getting relatively big. You can see, you know, compared to the most recent ranges, it's relatively big. It certainly could get bigger as it was, you know, over here, much bigger range. especially now that it's cleared this support area right there. You can see the VIX is spiking up here. Now, you know, it always, not always, but, you know, it results in whipsaws when you have internals that are in opposition of each other. You know, another thing that we discussed in Monday's letter, meaning here we've got the volatility index, you know, reversing up from this area, and, you know, these levels up here, if it was to go up here, that means the market would have to at least, you know, fall down toward this prior area down here. But you got the sentiment here, you know, and rightly so, option traders should be betting this market's going to go down. You know, they're getting paid for it now, but historically, they don't get it right. You know, once in a while they do. You know, as the saying going, a broken clock is right, you know, 2 times. But our moving average is getting closer to the bullish area, and the pink line is what's happening right now. So that's, you know, the moment to moment or day to day sentiment, which, you know, you've got option traders, you know, buying more and more puts, or, you know, fund managers hedging, you know, their portfolios. So, you know, that sentiment being an extreme is actually a bullish sign. But, you know, the breadth, as I pointed out in Monday's letter, had reached a bearish extreme, but there's also, as I said, it tends to neutralize each other. As the markets here are, in essence, are really just a big wide range from, you know, this move, you know, the move down that happened. So they've created an area of resistance now. Right? We've got a pivot up here. So we've got an area of resistance. I'm just trying to stretch that a little bit. We've got an area of resistance that we can mark off right there. And of course, the support is way down there. You know, so where is it going to stop? As mentioned, and as we looked at here, we've got this little shelf of support right there. So can buyers hold it there? So now it's a wait and see. And as we have our reference points, that's when we can go down to a smaller time frame and see if prices actually begin to take hold or begin to actually change the trend. And we do that in a very systematic way, meaning now this area up here, right, that is now our major resistance area on the 5-minute chart. And let me see if I can get a drawing tool out here. Right, okay. So we've got now a swing high, and it broke down there, and that's our major resistance. It would have to get above that level to change the trend on the 5-minute chart. And if it did that, well, then that would give us the evidence of, you know, maybe this is beginning to take hold in this shorter time frame. Clearly that's not happening yet, and it's still in a downtrend. And one of the things I see here that I always look at is, okay, here was a move, and now here was the next move. And while the momentum slowed down a little bit, not significantly. So let's, you know, make somewhat of an assumption here about possibly thinking the long side because of this support that's right over there. What could possibly happen? So when I say momentum is slowed down, one of the things that could happen in this area would be a break below that low and then an immediate reversal, or what I call a new low reversal. And that would also be a sign of buyers beginning to take control in this smaller time frame. So as they go through all of this, this is the thought process of just thinking, what could happen here? Can it turn around? Is it going to keep going at this point? Well, obviously, we wait and we observe until something sets up that would give us some type of information that we could participate in doing something. And as of right now, looking at these markets, clearly there's nothing. This is still just churning and possibly just a bear flag beginning to happen within this downtrend. Any comments, questions, throw them out, something that you want to look at here. Dan, I know you're unmuted. If there's anything you seeing that observations on your end.
Yeah, hey, Greg and fellow traders. I think what might also be useful, Greg, is it depends on the time frame in which people are trading. Day trade, swing trade, or longer term, in terms of both looking at the spiders on multiple time frames and the internals. And I think it's very helpful when you, as we do all the time in our Market Edge advisory letter, we come up with two scenarios. But I think it's very helpful to always have an ideal scenario in mind. So if it plays out, we are better prepared. Therefore, what I think would be helpful for you to do right now for swing to intermediate term traders, not the day traders off the 5-minute chart, as you're talking about, but you said that we have conflict in the market internals, which I agree. But maybe you can just talk a moment about an ideal situation for swing and intermediate for both the spiders sell-off and the market internals to be in alignment where we're going to get very aggressive on the long side, similar to what we did both personally and for our subscribers at the prior low.
Sure. Great idea. All right. So before I do that, with these internals, what we always look for is alignment, which we don't have now. So,
and maybe blow it up a little bit.
What's that, Dan?
I mean, maybe blow it up a little bit, if you're focusing on that right now.
Sure. So what we want to see is the alignment here, meaning, green, right? So
what Greg, let me interrupt you. If you wouldn't mind showing them the prior low and you put it right in our weekend letter about the bullish divergence of the oversold intermediate term breadth and the VIX being at crazy highs with a double top and breaking down of why we were extremely bullish, both on equities, but even on selling overpriced puts at that low, and then maybe go to the desired, retest.
Okay, so that was down here.
Correct.
Right, that was down here.
Yep.
When it came down here, and so sentiment at that time was at even more extreme than it is now. Makes sense, right? After the bounce. And then one of the things that we talked about was the fact that breadth had gotten down below minus 300, which historically, I can't remember a time when I've been looking at this for decades that the market didn't at least have a short-term bounce once breadth got down under minus 300. So with that having happened, and as you know, the VIX at that time had spiked up near that prior high. So we had all of these internals coming into alignment with the spiders coming down to this area where, the time, there's little bottoming tails bar down there, the 200 MA. So we had so many things coming together that, selling those puts at that time was like, geez, they're just like giving money away.
Exactly.
Right? I mean, it was like, are you kidding me? You're going to allow me to sell this put down here.
Right, that expired in a day, and they were $20 out of the money, and we got like $1.80 for them. It was insane.
And you know what? Those are the times that make up for these disgusting whipsaw type of markets that, look, if you're going to participate in the markets, it just kind of comes with it. And when something like this happens, you know, you can't know that it's going to happen because there's nothing that broadcasts that possibility, because look, this chart said it was going higher. Here it said it was going lower. And granted, you know, the move above this high was a little bullish, but it was a push up into a declining 20 MA with a topping tail that, you know, pushed above that prior high. So it was an outside reversal that, you know, was a shock bar. And of course, why I shorted it, and it didn't work. So I was like, you know, bar by bar analysis. This ain't working, Greg. Think long. Right? And now I'm thinking long, and now it's coming back. And that is a whipsaw type of market. And that's what we're experiencing. So now, with that being said, let's say we do get a move down here, and which could possibly be, you know, a head and shoulders type of a bottom. You know, we'll see. And then we can get an alignment of sentiment and breadth being bullish. Think long. So now, with, you know, having said that, let's take a look at those longer time frames and see intermediate term, you know, what we see here on those charts. So let's go first to the monthly chart. One of the things that they talk about on CNBC was, you know, the markets, whatever market they were talking about, broke its monthly winning streak. I forget whether they were saying the Dow or the S&P, you know, 10 months in a row, up, up, up. You know, it just didn't break a prior low. And clearly, you know, it did last month. And so what does this possibly mean? Well, the range expanded here. So we had an expanding range monthly bar in January. And that's where we got the accelerated move in January. And as we all know, you know, if you're reading the letter, we talked about that possibly being a short-term top. It was a warning sign. You know, accelerated moves after a move typically results in some type of a correction, could be sideways, could be down. And, you know, that certainly did not suggest the type of big pullback that we had of, you know, 10, 12% on the Dow in a week and a half, or, you know, whatever it was. So remember the breakout bar failure up here on the daily. So now we've got this whippy price action here with this bottoming tail. So what that kind of suggests to me is more of a trading range, because clearly there are buyers just lurking down there wanting to pick up shares. So we could be in for some whippy price action, which, you know, points to, even as a long-term investor or, you know, trader, well, you could hang on if, of course, say you were in from here or here. You know, you still got big profits in, you know, selling covered calls. This is a great environment for that, you know, because odds are making new highs are, you know, less likely. So, you know, those spikes up can be opportunities for selling covered calls. And we could be in for a trading range type of market here for a good part of 2018, you know, because of this whippiness here. Now, this whippiness does not violate this uptrend. This uptrend is solid and it is intact. So correction, whippiness, so on. At this point, there's really no reason to become a big bear on the markets. And, you know, our monetary market internal, which is based on the yield curve, is still bullish. So now let's look at the weekly time frame. Let me go from here. Also suggests choppy type of price action, right? Odds are, that red bar isn't going to turn into a green bar tomorrow. The most recent bar that we're looking at. So could it become, and whenever I look at a chart that isn't jumping out at me as to what is this telling me to do, I think of scenarios. So, and this is kind of reinforcing the whippiness type of thing. I was looking at the transports here. Here's a pullback into support. The angle of retracement is sharp, but then you've got this reversal here and a green bar, which says, hey, we can move back up again. And now, a second week later, we've got this topping tail bar, which now suggests lower. So which creates the thought for me of a measured move to the downside, which could put the transports down here.
Yeah. And Greg, I mean, you have so much knowledge in your head, but sometimes I need to slow you down. Can you explain what a measured move is and the psychology of why they work? And then secondly, you talked about a breakout failure of the spiders daily, which I think was extremely valuable, but we're talking about a different topic. Those might be two things to elaborate on.
Sure. So here's the same breakout bar failure on the S&P futures as what was on the spiders. And if you're listening in here and maybe new to Master Trader, if you go to the website under Chart of the Week, I've actually got an article there that explains the breakout bar failure in detail. So definitely, take a read on that. Now, a measured move, unless we could just put this over to a weekly time frame. And this is one of the things that I do on my charts is I mark up things from the past, and that's why this looks like this. So there was a breakout bar failure over here, which was probably on a smaller time frame, but this is a good exercise for everyone, and I still do it. I mark up things on my chart that actually happen, bottoming tail reversals, new high failure, excuse me, retests and so on, and it reinforces the concepts that we use all the time.
Well, and let me interrupt just to add another point, because again, you same point as before, but that is the following: that what Greg is saying, and that's why many times students call me Greg's translator, because he just that has so much in his head. So two things: Greg is saying that he marks up his charts exactly in the moment of what he sees, and then he leaves them there to see what happens as they play out. So this is one form of keeping a trading journal. And what it does, what we recommend to our traders, every single trade, good and bad, is you look at the chart, you write down the reasons for your trade, and you can watch your management while you're still in it, all the way to either profit target or stopping out at whatever price. And you do this after the market, after the trade's closed, and you reflect of what you can learn from it. So did you do everything proper, and the trade just didn't work out? And that's a fact of life. It's just like the FedEx man, dropping a package and breaking it. It's no big deal. But that's how you learn, is by keeping a trading journal. And it's just a fact of life. You're going to learn more from your failed trades than you are your winning ones, because many times people win the wrong way because they're in a bull market and they think they're a hero. And Greg has a saying of, that's borrowed money. The market's going to come back and collect on you one day if you are not learning properly. So those are my points here. This is kind of Greg's little, notations of his trading journal, so to speak, and notations. But then as we see how it plays out in the future, it's giving us information of continuously learning. I mean, Greg has been at this 25 years, a little bit more than I. And it's like watching a movie. Have you ever heard somebody say, like in that silly Halloween movie, right? When, the scare, murderer comes out and you're like, I've seen this movie, hundreds of times. So that is what experience is. And that's what gives you the seasoning to be a successful trader. Because Greg has 25 years of, I've seen this movie before. So
Yeah.
that's those are my points for now.
Thanks, Dan. And I'll tell you, that's exactly why I do it. But in addition, as long as I've been doing this, and honestly, because I do this type of analysis and making notes of it and such, I have unshakable confidence in the method that I use and teach. Sometimes to a fault. I mean, I stay objective, and one of the things that I always do when I see something happen is I ask why. Why did it reverse here? Sometimes, the majority of times, I get my answer. It's based on the concepts that I use. Sometimes, like now, I'm really not getting an answer as to why the market or the S&Ps didn't follow through higher after this reversal. And that, in essence, is another way of explaining a whipsaw, situation or market. It really doesn't provide a definitive answer based on my method anyway, as to why this pattern right here didn't follow through. However, I have different scenarios, and the scenario now, as to what Dan said, explain the measured move, is, well, the flip side of what's happened here is that it now points me in the direction of thinking measured move to the downside. So that.
Well, and before you define that, let me add one point. So technical analysis obviously is not 100% accurate. I mean, nothing is. Come on. There's some traders who don't believe in technicals, and to each his own. We measure success by looking at your your bank account. And I got whipsawed in this too. I was bearish when Greg was short on the daily, and then I turned bullish, and we have an incredible 85 to 90% batting average, which is dwarfs 50% coin toss. So technical analysis does work, but it's not going to work all the time. And I took my losses because of the pattern didn't work. And I think part of this, when you have crazy moves, that maybe Greg and I are going to differ here on our rationale, but it's it's not perfect. So just because the breakout did not continue, this happened when Powell, the new Fed chief, is on CNBC Live, scaring, big money. So big money is what created this failure. That didn't change the reliability of the pattern and our acting on it at the time. It was, 85, 90% successful, not 100.
Yeah. Yeah. And you know what? It's like, this big money, it's like here, over here, this chart over here, well, big money is scared to death and running for their lives. And now big money can't wait to throw their money at the market, jumping back in, and now they're running for cover again. So there is uncertainty, and of course that creates, whipsaws and such. So now,
you're gonna talk about the measured move, and then also when you get a chance, Andre has two questions.
Okay, sure.
But yeah, go ahead with the measured move because I interrupted you twice on that point.
So on the measured move here, and you can see on the weekly charts, right, here was the reversal. Now, the measured move can come up to an area of resistance and roll back over, or sometimes it happens in the middle of nowhere. And so here, well, let me just flip this back to a daily chart. You know, this really happened looking at the spiders here in the middle of nowhere, you know, but it turned. Let's say it happened on news. We could say it's because of the cues, whatever. But at this point now, this reversal here, having begun to fail, and the whipsaw is that we then have the potential. What I'm looking for here, that, you know, we measure to the reversal, is a measured move, and 9 times out of 10, you know, the measured move results in a move down toward the support area. You know, so it could be down here, maybe we break the low, and many times, you know, we slightly breaking the low and then the reversal is a fabulous point to be a buyer. So what I would, assuming, and we have to make assumptions based on what is in the moment, assuming we get the measured move to the downside and we come down to this major support and our internals are then, you know, lined up together, I think that is going to be one of the best opportunities for 2018 for swing or intermediate term trades. Even if we say that, you know, this market is going to be erratic or whippy in this year, it will set up opportunities at points in time where it has the greatest opportunities for more than obviously day trades. And that, you know, we often are looking for exactly that. We can find day trades almost any given day. But those intermediate term moves, when they set up, is what creates the wealth that we're looking for. In addition to the daily income and weekly and monthly income that we can create through day trades and the option strategies that we use every single day. Okay, so there is that. And I have Andre's question. So on a checklist basis, extreme price move. Okay, that's what happened here.
Yeah, I think he's asking about your recipe for an intermediate term turn to the upside.
Okay, so any turning point when prices are trending typically end with an accelerated move, and that's what we know as being climactic buy and climactic sell setups. Once that happens, and that is what happened here. You know, you got an accelerated move, and then the breakout bar failure that occurred here, and then prices moved down. Now, so once we have a trending move and it begins to accelerate, and ideally it accelerates into an area of support if it's going to the downside, we wait for that to happen. And then number 2, under saying multiple time frame analysis, look for a bottoming pattern in a smaller time frame. Absolutely. So whether it's intermediate term or whether we're talking day trading, right? With day trading, we could be using a 60-minute chart and a 5-minute chart and saying, okay, prices are trending lower, and we could have the ideal scenario would be, you know, trending lower maybe on the daily toward an area of minor or major support on a daily time frame. So we're anticipating a turn, and we would then see the 60-minute trending down, of course, because it has to be. And then as prices accelerate into that area, we could then, I guess I have to change this, we could then go down to our 5-minute chart, and we follow the trend. So the trend is still down on the 5-minute chart, even though it's trying to stabilize here. You see the wide range bar up. The trend is still down. So this is a situation where we say a bullish wide range bar is one concept that we use? Is it in alignment with the big picture analysis? And it's not. Right? It's not in alignment. So we have to discount that bullish wide range bar that's occurring right now in these futures. I would rather wait and give it some time to see if it actually begins to turn or actually does turn. So I flipped it over to the 60-minute and go through the same process. While it's in an area, right? So let's duplicate that. It's in an area of support here. This little consolidation there is an area, and this is beginning to form a bottoming tail bar. However, the 5-minute chart is still in a downtrend and just chopping sideways here. So you do nothing. Makes sense? Now, the next part 3 of the question was VIX breadth sentiment analysis looking for alignment. So the 3-part question there, looking at intermediate term, is absolutely, what I've been saying and really what you're asking for confirmation of those extreme moves, multiple time frame coming into alignment, and then our internals giving an agreement. And then, yes, we then look for those patterns. And since we're talking about intermediate term, we're looking for the daily chart to show us that bullish type of price pattern, right? Bottoming tails, breakdown failures, retesting failures, anything and everything that is bullish and confirming our bias. But the more important than the why. Yeah, so that is the checklist. A perfect question is to say, how do we put together a step-by-step checklist for making our decisions? And that, of course, is the essence of a trading plan, because if we leave it to ourselves to make decisions just based on our bias of what we might want to do in the moment without rules, that historically doesn't work out very well. Right? And one of the questions, as I'm actually showing this live in YouTube as well, I had a question to look at Apple. Well, let's take a look at that. Let's bring Apple and let me get the lines off of this chart here. And Apple is showing great relative strength here since it came up to the high. Let's go to the daily here. It's in an obvious place where it would back off from. Clearly, it doesn't look like the broader market. Well, kind of obviously looks like the Qs, and some you say, which is leading which? Is Apple leading the Qs or the Qs lead Apple? For a good part of the history, Apple has been leading the Qs. Now, as the Qs are backing off here, near a prior high. So, from the bullish point of view, what we want to see is, Apple spend some time really going sideways up here. So even though it's coming in a bunch, today, overall, what the ideal scenario would be for this to chop around in this area here. And then once our internals come into alignment and our market bias comes into alignment, that would be a perfect time for a stock like Apple showing relative strength to move to new all-time highs. So our process is quite systematic in that analysis. However, the markets don't always cooperate, and again, back to our situation of here, that move up, the topping tail, looked like it was going to go lower, it reverses back up, it looks like it's going to go higher, and then it comes right back in again. So that's why we have stop losses and rules to keep us in alignment with what is happening even if it's going to be, whipsaw at the time. So I hope this all helps, guys. We did this on a spur of the moment, to do this, this live webinar to, what's happening in the markets here and share some thoughts about what's going on. You can see the Dow is recovering a bit here. It was down a little over 500 and, not a big deal. It hasn't retraced, more than half of today's range. And looking at the 60-minute chart, no big deal at all, but it's stable. It's stabilizing a bit over here, at this time. What time is it? Actually 3:15. So as we come into 3:30, we really are going to see whether buyers want to step up here or not in this little minor support area. Hey, Aaron, how you doing, buddy? Good to see you here. Yeah, so you rode that like a champ up near the high. And, as it got close to the 50, which was part of our discussions there as to, it backing off. And, obviously it has. And I suggested, trailing a stop at a minimum under a prior day's low. And that worked out real great. Yeah. Do you have any expectations for tomorrow? Hey, Eva, how you doing? I know you're always been a long-term Apple lover. I remember your questions from a few years ago. I don't know if you're still in it. If you are, congratulations. Look, tomorrow, 3 days down into this little support area here. Wider range today, a little bit of buying stepping up here. It's probably going to be a choppy type of a day here tomorrow, I think. Same thing. We go through the routine as I've explained here. We've got that support on the daily. We've gone through the higher time frames. The hourlies are now in a downtrend. They're at support. So in no means is this market out of the woods yet. The 60-minute trending down, some support here. We go through the 5-minute, not the 50, the 5. We go down to the 5-minute, still in a downtrend, recovering here. So bullish price action, regardless of time frame, that's in a downtrend, begins to go sideways here, chops around. You can take out the major support and come back in again. You look for what you know as a bottoming pattern in the smallest time frame that you use. I'm talking 5-minute here. That's in alignment with a significant support area on a higher time frame. And we look for the turn in the smaller time frame. And then we see, well, how far might it go? And we begin to reverse the analysis. So that 5-minute stabilization is not going to turn around this 60-minute chart without a significant turn up. So if we get the turn on the 5-minute, we know that we're day trading because there's nothing here to suggest anything more. If the whole day turns and we got a green day tomorrow, when prices retrace up into resistance on the 60, that's the beginning of stabilization and possibly a turn. And at that point, does my measured move scenario begin to, that not to work? So if we were to get a green day tomorrow, does that result in the measured move lower? Whereas the 60-minute, I'm throwing a lot of stuff at you guys. This is like a seminar. You've already gotten the crux of it and we're going through a review. So if your head is swelling with this, I can appreciate it, but this is what we call master trader technical strategies, and putting this together is where your brain clicks on this stuff in the moment. You just begin to put it all together in multiple time frames. So if this was a green day tomorrow, which is possible based on what I'm telling you, 5 minutes, 60 minutes, so on and so forth, and then we'd look for the 60-minute, if it came up to resistance and begin to turn lower, So green day, red day, follow through to the downside. Let's see what tomorrow brings. All right. And as that unfolds, of course, we would update that accordingly. So if you're in YouTube now, subscribe to the channel. Most days during the week, or at least 3 out of 5 days during the week, I do a video in the morning. And I've started posting those videos in the SMS feed that we post updates of trade. So our subscribers, even if you're not subscribed to the channel, I'm posting those videos in there so that, you can watch them before the market opens to get an update. So this is what we do every day, right? Dan says NQs are starting to look like a bottoming tail bar here. Well, it's trying. It's a pretty wide range, but that is certainly not, we wouldn't expect that to take out today's high tomorrow with this pullback. You need stabilization at this point. And there's the 60-minute chart, and then this would be one of those scenarios where, well, why is it stabilizing here? It's because it's into this support area down here, but it's still in a downtrend. And it have a ways to try and get above that major resistance area up there. Okay. So we're into the last half hour here, and we'll see where this all goes. So far it's just some stabilization, and we could look at a few of these other stocks before we wrap it up to see what's going on here. Microsoft. You see, it's holding up relatively well. What has been strong continues to be strong. So the buyers aren't running for cover, and what's been garbage, right, continues to be garbage. It's just here was the day Warren Buffett was on TV talking about how worrisome whatever's going on in G formed a bottoming tail bar, and now it's back down to the low, and who knows where this is going to go. Looks terrible. LMT. Big, ugly, wide range bar today, coming, uptrending 50 MA, which is always going to be a focal point. We look to the left and see that it's got some sloppy support there, and wide range bar. So it's on the 60. There's your climactic type of a move, an accelerated move close to support. And let's say, would we want to day trade this now based on a climactic 60? Well, you flip over to the 5, and you're aggressive. You could trade that there as a scalp, but climactics are not one of my favorite. I prefer a retest because you're going to get a bigger move with a retest type of a pattern. But what is happening here from an intermediate term point of view, right? So here is a stock that has been doing great, right, for a very long time. And it's getting whippy, right? So this type of whippy type of price action is suggestive of a short-term top and, big red down bar on the weekly. This would probably be a great candidate, even up here, to have sold covered calls if you own it intermediate term, or a bearish call spread up here at that time on a retest, and a whole bunch of top and tails up there. I don't know, I didn't see it. Dan's going to say, Greg, why'd you miss it?
I love it. I blame him for everything we miss.
Yeah. AKAM. It's interesting. Here's the gap up, and it's held up really, really well in with this market. It got really whippy here, but I love the fact, Aaron, that it came down here, and this is what we call a downside shakeout. It came down and it came right back up again and went sideways. And look at how this thing is holding up here over the last couple of days. This is really bullish price action. So I want to look at the higher time frames and see what's to the left. And so I could do that on a smaller time frame by just scrolling, of course, but it's in this area of resistance here, and it's acting really well. So when you hear somebody say prices are acting well, quantify that for me, please. All right. So, and that's what I'm doing for you. This is acting well because it is going sideways at resistance. That's what acting well means. I mean, it's reached an area where there is sellers and it's not going down. That is acting well or bullish. So back to our intermediate term scenario as explained with the broader markets and internals, and Akamai continues to consolidate here like that. Wow. This thing probably blasts off to the upside through that resistance and potentially up toward 80 bucks. Okay. Love it. Right. BMY gave us a sting in the eye, of course. Intermediate term, it still looks okay, and why we had focused on this. And you know, it's come back in here, but this intermediate term, there's nothing wrong with it. It's a giant bottoming pattern, Christian, and you know, it got all whippy over here, wide range bar up, consolidating a little bit more than I certainly would like. So now let's go to the daily time frame. And it's just erratic and whippy. I would keep this on the long watch list to see that this volatility begins to contract. And I believe that it will based on what I've explained on the higher time frames. So I do like it longer term. Just right now, I think the markets have you know, foil things here for a bit. I believe it'll, you know, these long-term patterns, the buyers come back to them when the market settles down. And that was our idea with Intel, because the monthly chart is super bullish. You know, this thing has done nothing for 18 years, 17 years. And building this long, gigantic base, and it broke out in 2017. Now it's all whippy and going crazy here with the market, you know, but that will eventually settle down, and it's got a huge void above. So it's coming in from the prior high. Keep an eye on this as an intermediate term play for it's settling down with the market coming together. Right, our internals that we talked about, so on and so forth, because as long as this can stay in the upper range here and just chop around, it is going to outperform when the market calms down. And we will continue to monitor this because of those reasons. Juan is here, Dan? Our Juan?
I think so.
Awesome.
Juan, raise your hand.
Juan is our longtime friend from Colombia who runs a great service in Spanish. And I don't know if he's here or not, but there's a Juan here. Anyway, I don't know if it's our Juan.
Right.
Anyway. All right, everyone. I hope you enjoyed this. You know, thought we'd share some time with you to go over what's happening in the markets. And hey, it's Juan. Hey, buddy.
Well, and Greg, tell them about MT Live.
MT Live?
Coming soon.
On Facebook?
Yeah.
Yeah. So Dan and I are going to start to do, we're putting it together now, a live show on Facebook similar to this, different software, talking about different topics. But that'll be on Facebook, and that's coming up soon. And for those interested, we are working on getting together, a chat room for during the day for updating things, as we're talking right now, and being able to update the live trades, which we do through the text messages, and that happens instantly. But actually, doing a little bit more education as we can do in a live chat room as well. So Dan needs makeup for Facebook. Dan always got his hair trimmed just nice and looking real good, and always at the gym. So, all right, everybody, you guys have a great day, and let's see what tomorrow brings. I hope today's review helps you do the analysis of whatever you're trading tomorrow. And after that, just sit back and enjoy the weekend and relax, and these markets will calm down. Thank you, everybody. Thanks for joining us. We'll do this again.
Yep. Happy trading.
All right. Bye-bye.